Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 6 o'clock in New York. It is the day after Christmas, December 26, 2017, and this is the Daily Report for Gold and Silver. Nice continuation of the rally that began approximately 2 weeks ago. We have gold trading substantially higher, up approximately $8.80, currently fixed at $12.8760. Silver up over a full percentage point, a 17-cent gain, $16.61, and that is all in light of a fractionally a lower U.S. dollar down about 0.1% at 92.81. U.S. equities continue to soften and quietly trade lower. Dow Jones Industrial Average losing about 8 points on the day, 24,746, with both the S&P and the NASDAQ trading lower on the day, but an impressive recovery by Bitcoin, the cryptocurrency, on both the CME as well as the CBOE exchange, with Bitcoins trading at 15,640, 15,800, depending on which exchange you look, but it is a net change on the day of well over $1,000. As traders began to look at markets after the extended 3-day weekend, they were to see the precious metals complex as a whole gain sizable value on the day. Gold is currently fixed at $12.8760. That is a net change of about $8.80 or 0.7%, and that's after trading to a high today of $12.8840. So as you can see, we are simply $1 off of the daily highs. More importantly, what we have witnessed over these last couple of trading days has been extreme, and it has been pleasant, as we saw last week's activity take gold pricing above the 200-day moving average, and that would be followed a couple of days later, in other words, by Friday of last week, as it traded and closed above the 50-day moving average, which is a very bullish statement to be above both moving averages. As you know, we have been on record believing that there wouldn't be any real resistance moving above the 200-day and the 50-day moving average. We also stated that we felt there could be some minor resistance at around $12.8280. However, price action today took gold through that resistance level like a hot knife through butter. And as I said, we're currently trading up about $8.80. We currently believe that any kind of real resistance shouldn't enter the market till about $1,300, about $12 away from our current pricing, which takes us to our current stop and the fact that we are sending out a trade recommendation, which you should have already received, recommending that we trail our stops higher. If you recall, initially, we put our stop at a very loose point below these lows right here of 1243. My recommendation is to trail our stop up, and the price point that I'm comfortable with currently is to trail it just below the 200-day moving average. Another thing about using these averages as our price point for a trailing stop is if the market continues to move higher, as I believe it will, this moving average will continue to gain value or move higher, and you can consistently on your own trail the stop behind the 200-day moving average. The one thing we want to see is if we are correct and prices continue to rise and approach 1,300, we want to see how they react. If they show some sort of headwinds or resistance, as we can see occurred here in November, or a spike just above that as occurred in October, then that will tell us that it might in fact be time to pull profits on our current trade. However, if we see the market really break above this with some type of strength, then we might want to maintain our long positions and trail our stops up just below this 1,300. But that's a topic for another day. For right now, my recommendation is to maintain your current long position and to trail your current stop to just below $1,270 per ounce. Silver has also been running to the upside in tandem with gold. However, the technical indicators are quite different. As you can clearly see on this daily candlestick chart of silver, we still have current pricing below both the 50-day and the 200-day moving average, and we still have the 50-day moving average below the 200. And so therefore, we felt that there could be some more headwinds in silver ahead. However, we broke substantially above the current level of resistance that we were looking at, which was 1635. It was based on this low, as well as the fact that it is a 61.8% retracement on Friday, and today's market pricing takes it just below the 50-day moving average, which is currently at 1668, with silver currently fixed at 1662, which is a full percentage point gain on the day. For traders that are long silver, we believe you should run it in tandem with gold. Move your stop up, and your stop should now be below the 61.8% retracement at 1635. And traders, lastly, I do want to take a look at the cryptocurrency Bitcoin as it trades on the CBOE futures contract, currently trading up $1,850, a 13% gain in value, which puts it fixed at 15,810. Chicago Mercantile Exchange is currently fixed at $15,755, so they are within $100 of each other in terms of futures pricing. But the most interesting thing in Bitcoin has been the dynamic moves and the extreme volatility we have seen. Given that this contract opened at around 15,000 per Bitcoin when it opened on Sunday 2 weeks ago, the market was mired by trading in an extremely volatile manner immediately up to about 20,500, and from there falling from 20,500 to these lows last week at 11,000. In other words, the net result of the extreme volatility in this cryptocurrency was a net gain of about 25% as it moved from 15,000 to 20,000, and then a decline in pricing of about 50% as it moved from 20,500 down to 11,000. We've seen a dramatic recovery off of those lows over the weekend as it traded overseas last night, and then again following through to today's activity, and as I said, is currently fixed dynamically at approximately 15,760. The 64,000 question is whether or not this decline is a indication that there was a bubble, that bubble burst. We had a 50% decline in pricing, and now we can expect these cryptocurrencies, specifically Bitcoin, to begin to return to their rally mode. I believe that there is actually a high probability that that will occur. We haven't issued a buy signal yet in Bitcoin. We have been looking to buy the dips. I'm a little concerned between the holidays, meaning Christmas and New Year's, in terms of volume that is currently in the market, but we are certainly seeing the kind of trading range that will present incredible opportunities, whether it is at the end of this year or the beginning of next year. Traders, the rally that we identified last week is fully in play. We talked about different levels of resistance that it could run into and different levels that it should have no problems going through. We have seen the market do exactly that, and today going through what we believe could be minor resistance. We also sent out a special trade alert with the recommendation to move stops and made recommendations in both gold and silver in terms of pricing, and took a serious look at Bitcoin because we could have seen not only the bubble burst, but we could see that cryptocurrency finding support and now moving to higher pricing. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.